Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Litecoin and its token LTC. None of the content financial advice. LTC composite risk per my website is at less than zero point 0.2. This is the homepage of my website, cryptoweeklies.com. Link on the bottom of your screen. Uh, it's available for all for free. So now that the risk is less than zero point 0.3, again, most of the cryptos are in this risk zone. Litecoin not an exception. We'll analyze how this score was calculated again based on three major indicators related to trend and valuation. How is the logarithmic regression deviation? That is, how far is the price with respect to the fair value of Litecoin using regression principles. Then time weighted average price based, gravity of time based analysis, if the price is in overbought undervalued territory based on average price of its life cycle, 20-week simple moving average price based distance, drawdown from the previous all time high. And then these are the market cycle related metrics. Then volatility and beta correlation with S&P 500 and the Sharpe ratio. So starting with the first analysis, let's start with the time weighted average price, which is about 18% of the weight of the overall weight. This is again the easiest way to understand this blue line, which is the time weighted average price, is through the lens of gravity of time. This means that, and again, based on the distance between the price and the blue line, the color codes are assigned. The way to understand is when the price is below the blue line, you're essentially beating the clock by entering at a level where the markets have historically spent very less time for an asset which has an upward trending bias. Uh, Fair value is the natural state where things are not too overhyped or ignored. Undervaluation is basically whenever the price is borrowing, price is at that level where the price action is borrowing from the future, right? That means there is a likelihood that the price comes crashing down, that for example when it goes to orange or red zones. And now again, just helping to understand, unlike just a simple moving average, time weighted average price requires a price action related sustained shift. Doesn't just look for any temporary volatility such as a god candle here or a flash crash over there. It measures the conviction over time rather than temporary volatility. Helps identify the time in market advantage by starting to analyze the asset since inception and identifying that true cost basis for long term holders if they are DCing, let's say at a daily level or a weekly level. So this is again identifying and getting a better deal than historical average holder whenever the price is significantly below the time weighted average price. Right now, the time weighted average price for Litecoin is $72. The current price of Litecoin is at around $55. That means it's at around 23% discount or negative difference between the price and the time weighted average price. You can see price at this point again at $50 to $55 is from the monthly candles as well. It's very close to the bottom that Litecoin had in 2018 2019 and also very close to the 2022 bottom. One could argue that again, if there is a monthly close below $52 $53, that would be a new low for Litecoin. Right now the price is also below the 200 week and the 300 week simple moving averages. The 300 week is at around $99, 200 week at around $81. So a longer term moving average also are in line. The technical levels again for this time, the lower high structure for Litecoin got broken down in early January 2026 when this white line over here got broken down to the downside. The lows for Litecoin which came in 2022 were at around $38. That sorry $42. That could be a level to watch in the bear market of 2026. Nonetheless, if we take the time weighted average price as a interpretation or a metric, how low can the price go with respect to the time weighted average price in the bear market? In 2022, the price went 35% below the time weighted average price. Back then, the time weighted average price was $67. Right now, it's at around $72. That's because a lot of time Litecoin has spent above that time weighted average price line, just helping to push the time weighted average price to the upside. In the market cycle before that, in 2018, the difference between the price at the low and the time weighted average price was at around 38%. So this time around 30%, if we take extrapolation, 38% negative to 35% negative, and let's say this time around 32% negative from the time weighted average price. This means per this analysis the price is very close to the bottom. Per that extrapolation, again there are no guarantees that this trend holds, and in the depths of the bear market of 2026 the deviation does not go further to the downside. This is one model. Then the next best model, which accounts for a lot uh, of that valuation of point two risk, is this fair value understanding. This is the polynomial regression based non-linear fair value of Litecoin. This trends down in the bear market and up in the bull market. As Litecoin did not make a new all-time high in 2025, the slope of the regression function is now having a downward bias. The price is very close to the fair value, which is at around $50. It has a downward slope at this point. We do not have not included a decay or diminishing volatility or diminishing return based function on that. On this analysis, will be releasing a similar analysis with diminishing returns or decay function that we like to add to the regression bands towards the end of the bear market. So if you want to stay updated, please give a like and subscribe to help the channel grow as well. And again, as the overvaluation territory for Litecoin is at around $100 and the fair value is at around $49, the worst Litecoin can do in this bear market is at around $25. That's the one standard deviation undervaluation. Again, price does have the capability to do that in towards the end of the bull run. If let's say there is a macro drop in the wider asset class as well as the macro environment, if starts going down to the downside, then the one standard deviation residual support, which price action goes towards the end of the bear market, is at all the way at around $25. That's more than 50% correction from the current price. That's one reason that the risk is not closer to zero. That's because the regression risk is still quite elevated. You can see in terms of color codes, although this is less than 10% risk, the price is still slightly above the regression based fair value. This is at the daily level and instead of the weekly candles, the same model. The 20-week simple moving average price based interpretation, again the price has now come close to that 20-week simple moving average price based bottom. In this 20-week simple moving average price based model does trigger early on in the bear market, like it triggered on in Jan to March of 2022. We are again 4 years later, towards the end of February 2026 is closer to that time period than all the way to the bottom in June, let's say like it was in June of 2022. This time around 1 month prior to June, it could come as early as about May of 2026. So again, at least this model in the short term has signaled a lower risk environment for Litecoin. The machine learning based price analysis of what the price could do in a bearish downturn, again the support levels for Litecoin, if there is a drop till early June, is at around $25. Again, that kind of matches that regression based one standard deviation residual, the green line that we saw over there. If the market stay in a negative phase or a bearish phase till that point, the support for Litecoin is at around $25. That is again slightly higher than the 2018 lows at a weekly average for Litecoin. So it could still be a higher low from that perspective, but could go lower than this 2022 to 2024 structure. Again, one could argue that is already broken now that the price is lower than what it was in August of 2024. Right now the price is at around weekly average is at around $54, whereas in August 2024 the lows at a weekly average price came at around $59 to $60. So let's see what happens, and if there is a counter trend rally before that eventual drop in June, then the green line essentially shifts from the $56 to, let's say, if there is a counter trend rally in March, it starts from $78 instead of $56, and then proportionally speaking the lows could be slightly higher than $25, maybe at around $35 towards the end of June 2026. More or less, if we were to analyze Litecoin with respect to estimated bear market bottom, the best aggregated model which tunes out any individual model related noise, considers the regression risk, time weighted average price risk, and the SMA risk. Together weighted risk is at around 0.21. Base bear case is again upon us. It's already at the base bear case bottom, which was evaluated at around $55. The panic case is $52. That is also materialized, and the worst case is at around $45 for Litecoin. So again, not too far from here at around 18% drop. That's the scenario with respect to the bear market bottom. If you were to analyze Litecoin with respect to its peers and analyze in terms of a portfolio builder based interpretation of if what's the annualized return for Litecoin since 2021 and what's the annualized volatility again. uh, Litecoin is not in the danger zone where it's in this low return high volatility phase, but it's also not in the gem zone which features cryptos such as Bitcoin, Tron, Bitcoin Cash, XRP, Link, etc. ETH is on the boundary of that zone. One could argue now it has come down to the uh, again still has a positive return of 14%. Litecoin has a positive return of about 5%, but volatility is at around 78%, and the Sortino ratio is at around 0.06. It's closer to zero. Again, higher the number on Sortino ratio is better for the return versus downside risk interpretation. Still it's positive, still above zero, but not in the gem zone of the asset class. Nonetheless, the composite risk for holding Litecoin with respect to its peers is at around 0.5. For context, the lowest risk composite score is for Tron, and again, Bitcoin is shortly after it at around 0.38. Litecoin and ETH are essentially at similar composite risk score ranking, but still not within the top 10 gems of the asset class as the annualized return for these assets since 2021 has been lackluster. That's something to note uh, and be mindful of. Again, this is just data analysis and interpretation. In terms of the heat map, if you want to check what has happened at or transpired in the asset class and how Litecoin stands in that rally or lack of that rally, again you can see Litecoin is in the last 24 hours modest gainer over the last 7 days. Most of the assets are again either flat or rallying either to one extreme or the other. Litecoin is in this middle zone where very less price action growth occurred over the last 7 days. Or the last 30 days, the asset class has been largely negative. Litecoin still holding better than most of its peer, down only by about 18% compared to these cryptos over here in the bottom quartile, which are down by 30-35% over the last 90 days. Again, similar story in the asset class. Most of the cryptos are down, some as low as about 60% down from their 90 days performance, previous 90 days performance. Litecoin is in this worse category, down 35% over the last 90 days. One could argue it's in the bottom half rather than the top half. That's an area of concern. It's nowhere close to being the crypto of the day. That that place is taken, ground taken by Tron. Nonetheless, overall risk for Litecoin accumulation right now per the models is less than 0.2. For context, Bitcoin risk accumulation risk is at 0.28, ETH accumulation risk is at 0.258, almost 0.26. We can say 26%, or as over here at around 29%, whereas Litecoin accumulation risk is roughly speaking 20%. With that, I would like to conclude by saying the following things. First, again, these assets are highly risky. Just because the model says the risk is less than 0.3, that doesn't mean the price action has to bottom over here. But in largely speaking, in terms of how the historical risk was for Litecoin, especially, and how the uh, price action has been in that range between the tight range between $150 and $50 range. Again, it's closer to the bottom of the range than the top of the range. If that range were to hold true, if we were to go by the summary risk of the technical based normalized risk, again it's coming at a very low risk over here based on the 20-week risk, 200-week risk, and 200-week simple moving average price based risk. Again, this model indicates that the bottom is very close to us. It doesn't mean that it has to be within the next couple of months or within specific percentage, but just as a historical analysis, the risk level of accumulation for Litecoin has gone down quite a bit. And trying to conclude on a hopeful note, if let's say the next time around there is a proper altcoin season in 2028 2029, the price of Litecoin could potentially go to that $500 target. That's the base bull case. For context, Litecoin in 2021 was at around $414 itself. So again, if the market cycle, or even in 2017 2018 time period, the price action did go to $375. So if there is one more leg where the price action goes up and has puts up a new all-time high, that all-time high is roughly speaking at around $500 as extrapolated by these regression based risk model, time weighted average price risk, and the simple moving average price risk based model. That's roughly 10x from here. And with that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.